Mastek has decided to demerge the insurance business, and what are they trying to achieve and what's the rationale behind that? To understand that, let's connect with the top man, Managing Director and the Group CFO of Mastek, Mr. Sudhakar Ram. Mr. Ram, good afternoon. Thank you for joining us. First, let's understand the thinking behind this move. What are you trying to achieve and how will this benefit your shareholders?
Yes, good afternoon. The whole idea is actually to demerge the businesses into two parts. One is the vertical solutions business, which is largely UK driven, and second is the products and services business in insurance, which is largely the US driven part of the business. The idea is basically that there has been a different business model, different investment requirements, different growth opportunities in both these businesses. And by keeping both under the same umbrella, we felt that we've not been able to optimize the growth opportunities as well as the value in both. By breaking it into two companies, with every shareholder of Mastek owning a share in the new company also, there'll be two independent companies which can completely leverage the growth opportunities they have in the marketplace and actually realize their full potential in terms of valuation. So we believe that this is of good value to the shareholders of both the entities going forward.
Mr. Ram, hi, afternoon. So decoupling these entities from Mastek, do you think it's going to provide a better platform to tap the opportunity in the US and the UK insurance market? Is that your rationale behind that?
That's precisely the rationale. The idea is that we would not only be able to invest what is required from an IP perspective to grow in both these markets, to market as well as to sell in these two markets, but we'll also have the flexibility to raise capital independently for both these entities, depending on their own investment requirements.
But Mr. Ram, demerging and creating two companies means two listed companies, separate listing requirements, separate management bandwidth. Maybe talent could also be split. Is this exercise worth it?
Definitely. So we have gone through the pros and cons of this, and unanimously the board felt that this was something which would be in the best interest of every stakeholder. And we have the management bandwidth. As a large company who's been in this business for 32 years, we have grown a whole lot of talent in both ends of the business. So we have the management bandwidth as well as the board would get distributed among these two entities. So we have the wherewithal to make both these parts work and grow.
The capital of both these companies now, and in terms of the total assets, how would assets and clients be split? Because I'm sure there would be some degree of overlap here as well.
No, clients, there'll be no overlap because every insurance customer will move into the new insurance entity which will be called Majesco, and all other customers who are doing solutions business with us will be part of the Mastek traditional business. The assets based on what is required in each part of the business, they have been distributed, and the opening balance sheet is already put up on our website as part of the investor presentation. So it's completely based on what each part of the business requires.
Mr. Ram, in your press release, you've said that business will be able to independently pursue their growth plans through organic and inorganic means. What kind of organic growth do you now foresee from for both these companies from here on?
So exact growth rates we don't share, but you are aware of the kind of opportunities which the insurance market throws, especially in the US, where people are going through a once-in-a-generation replacement cycle, where the core policy admin systems, their billing systems, claim systems, all of them are being replaced. And the investments that we have made over the last 4 years, we have spent a lot of money in building our intellectual property for these applications. Those investments are very well suited to meet the market opportunity. So we have a good opportunity to be a market leader in insurance in the North American and in the global markets going forward. We are positioning this to see how we can be among the top players, top 3 players in the insurance market on a global basis.
I know you won't give us details, Mr. Ram, but are you already considering some inorganic options? Seriously?
Yeah. We always have some things in the pipeline. Nothing is matured to a level that we can share, but there are opportunities which help supplement and complement our own solution offerings.
Your insurance vertical, Mr. Ram, constitutes about 55% of the business. At what rate has this part of the business been growing at, and how do you see it growing in the foreseeable future, if you could give us some numbers that we could work with?
So the growth has been in different phases. If I take the mid-market, which is our focus in insurance, I think over the last 3 years we have grown at 25% plus annually in that mid-market segment. We have had top-tier customers who have come in, but that is spotty because top-tier customers you don't win every year. But really the sustained growth is around mid-tier, where we have had a 25% growth rate in this business.
Would you be looking at getting a PE player in the new entity or Mastek? Because you mentioned that you would be needing capital, and we've seen that PE or incubators always they look out for such businesses which are in the IT space where the scalability could really be a big opportunity.
Can you just repeat the question?
Well, I'm just trying to understand from you that eventually would you be roping in a PE investor either in Mastek or Majesco, because you've mentioned that you are looking at raising capital.
No, we are not looking at disinvestment as much as enhancing the capital base to take full advantage of the growth opportunities. So both are important entities. The founding team have remained in solutions. Ketan Mehta has moved to insurance. So the intent is to grow each part of the business as sister companies.
Final question, and then we'll wrap up the discussion. I know I've extended my appointment with you. How soon will your existing shareholders get the new share? How much time before all the regulatory approvals are in place?
So this is there are a lot of regulatory steps. It requires stock exchange, SEBI and High Court approvals. So we expect, our merchant bankers have advised us that this takes almost an 8 to 9 month period. So we are looking at the whole thing coming into effect and 2 new entities being listed by next June. But that's only a tentative date. It depends on how fast each of the approvals come.